guys, it's Doc's Market Minute for Friday, November 6th. I am looking at the dollar index right now, and the reason we're looking at the dollar and this big move here that's happened is because of the fact that the jobs report today came in pretty hot. And what that means is that has now increased the probability of the Fed raising rates in the December timeframe. And now, according to FedWatch, we now have a 70% chance of a rate hike in the December timeframe. Now, this meeting is going to be in mid-December. This is the last Fed meeting for the year, and it's one with the chairman conference, and it's it's going to be heavily anticipated. But don't forget that on the very first Friday of December, we're going to have another jobs report, and so if we don't see the same type of gains as this report that we had today, then that's going to put some doubt as to whether or not. So in other words, if we have another light report like we had last month, then I think the market will have a huge amount of uncertainty. So for right now, we still have a 70% chance as of today, for about a month from now, probability of a rate hike. Now, no big deal. It's only going to be a quarter point, and it's not like the Fed hasn't telegraphed months ahead in advance that this rate hike is coming. And so back to the dollar. How on earth is this affecting the dollar? Well, when you're raising rates, all of a sudden you want to be part of that, right? So this is what we looked at the beginning of this year when we saw this enormous move higher as oil went down. That exhausted this chart. And at the time I said earlier this year, I said, look, this thing is done. We're probably going to consolidate in a very noisy, loud range for a number of months. Well, it's been almost a year now that it's been doing that. And notice on the weekly chart this beautiful little triangle pattern here. This is great. A lot of energy here too. A lot of energy, enough energy I would say at the monthly chart, a lot of energy at the weekly chart. So it looks like it's ready to make its next weekly swing. The only issue here is that with a day like this is absolutely such a linear move. It has exhausted this chart now. It's going to be difficult for it to just keep zooming higher. Let's see how this has reacted to this in the past with last year's rally. Let's see how this occurred here. Okay, we had this final tail here which brought it to 25, but you can see that the way that the dollar moves, when you have a linearity of market move that creates the daily choppiness index to go all the way down to 25, then this rally comes to a screeching halt. So where are we today? Let's take a look. We are getting close. A couple more days to the upside here, and we're going to be right back at the all-time highs at about 100. So I would anticipate this having a difficult time getting through 100. But this may be a sign that the dollar is on the move now with the next weekly swing. So keep an eye on that. And if that does happen, if we have a rising dollar, that's going to put more and more pressure on those multinationals and the earnings reports. So the earnings expectations are going to continue to drop with that. And so with every change, there are unintended consequences that come with that. But we'll see what happens. This rate hike has been on the table for a long time. Check in early December with the next jobs report. Have a great weekend, folks. We'll see you back here on Monday.